Hey everybody, welcome back to Managing an Options Portfolio. Mike Fairborn sitting in for Brent Morris, who's your normal instructor for this class. Expect to see him next week. He does a great job. But folks, very excited to be with you all today. I'm joined in the chat by a great friend, colleague of mine, Connie Hill. You'll see her in the chat as CH. And folks, you can follow us both on X, Connie Hill CS, Mike Fairborn CS. With that today, folks, hey, a lot to look at. You will notice that we are in the middle, well, many of you'll notice, we're in the middle of earnings season. And with that, there is a lot of volatility around earnings. Well, how can we use that volatility, or at least recognize that volatility around our option trades? I want to dive into that a little bit more today, talking specifically about implied volatility. I want to actually show you that on the charts itself. It is a chart indicator that we can actually see, and I'll show you different aspects of it to be aware of and ways that traders might also trade with it as well. So looking forward to our discussion, folks. I hope you are all strapped in, ready to go. Let's do this. Let's hit some disclosures to get the show on the road. All right, options carry a high level of risk. They're not suitable for all investors. Now, multiple leg option strategies will involve multiple transaction costs. With long options, investors may lose 100% of the funds invested. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. Rolling strategies can entail additional transaction costs, including multiple contract fees, which may impact any potential return. Now, the material we're presenting today is intended for general information and educational purposes only. Paper Money software application is for educational purposes only as well. The important note, Paper Money virtual trading, which we're doing here today, that application will not assign a short option position early, which is different from a real trading account. Some final notes at the bottom. Investing does involve risk, including the loss of principal. Past performance is no guarantee of future results. Okay, well, with that, let's dive on into some charts here and get going. All right, perfect. Well, a quick glance at the markets. You can see where we're at. We're really kind of straddling that 50-day moving average, coming in right up top here. And by the way, we've held this, folks, for quite some time, have we not? This has been a kind of an extended trend, and here we are. We've held above it. I mean, there's just really a couple of times we dip below it. Well, I would say, a major dip here. We close below here, close below here. Now, every single time, though, that we've gone below that, we have continued in the upward direction of the trend. And I only bring this up because, generally speaking, yeah, if you're looking at 500 companies, the S&P 500, a lot of very well-recognized names as well. If that's trending up, a lot of those companies within the 500 are trending up, and it could give us a general bias, what I'm referring to as the trend. The trend could give us a bias in terms of upside potential. Will it continue up? And that might give us some ideas as to, bullish strategies, bullish to neutral strategies, maybe just straight neutral strategies, maybe not bearish strategies completely because the markets are trending higher. But I think it's a good gauge and something, kind of helpful to look at for sure. Folks, by the way, I did get Brent's login, and so I am using Brent's material here. And so I want to take a look at a review of his trades as well. But before I do that, just a quick note. I'm just going to go over here too, and just, let's take a look at the NDX. So a lot of, tech drivers that are within this group here. And there you go. There's the breakdown that you saw over here. Prices coming back down, dipping below the 50-period moving average. Now, we've done this a little bit more extensively over the past, going back a full year, dipping below, let's say the 50. We've hit it over here, here again. This is maybe the fourth or fifth time we've dipped below, but we have continued to drive higher here. Now, one of the things traders will look for at this point is, hey, we come down here, we broke lower, but it's kind of a similar low. These are similar highs. We're kind of in a range. The question is do we come up 50% or whatever, or do we break a new low? Do we start to trend down over here? Because that could change the dynamic for a lot of the technicals out there. And by the way, a lot of companies within, let's say, the Mag 7, as you guys have been watching, and I did look at some of Brent's previous trades, existing trades. If you look at some of these companies, yeah, they've been a little bit choppy. They've been down a little bit, haven't they? Here's Tesla as well. Sideways, more sideways. Apple, I would say, would be a little bit more down. lower lows, lower highs, and that's kind of the trend I was talking about over here. You made a new low, excuse me, you made a low, you made a higher, excuse me, a lower high. Let me just identify those on the chart here for you, because for the longest time, yeah, it was higher highs, higher lows. But one of the key indications can be is when you start to make those lower highs, and then right there, that was a lower low for the first time, folks, in a great while. We got a lower low. And with that, we saw an acceleration in the trend. And this is just an example to look at. Let's say if the S&P does something like this, or even individual stocks, we can then be alerted to say, well, instead of the long call, maybe it's the long put or the short call verticals, right? Maybe bearish to neutral. We might flip that. In addition, I do like these indicators that Brent has drawn on the screen here, that he has that laid out here. We've got, the 20-period moving average. We've got the 50. You can see prices did pretty well break through that 50. And then what did you get? This is so interesting how this happens sometimes. It doesn't happen all the time, but it happens frequently enough. And I can see why Brent is using these two moving averages. Notice this with me. Do you see that crossover right there? In other words, the 20 is dipping below the 50, implying that the shorter term moving average is now outpacing that longer term moving average to the downside. Look at this. When that hit right there, that's when the crossover occurred. Do you notice that that was also the exact same time where we got a lower low on the chart? So it can be an interesting confirmation that traders will like to try to tie in to their trades as well. Happens a lot. I've seen it on the 2040. And no stranger to saying on the 2050 as well. But there you go. Those crossovers can be helpful. They can be a little bit useful too as we go through them. All right. All right. So let's do this. Let's get ahead and dive now into Brent's previous example trades. And I've just pulled it up. You'll see these trades come up in his class as he goes into them each and every week. I wanted to hit a few of these that we're looking at here. So he's got BMY. BMY is profitable. That's Bristol Myers. You got Freeport McMoran. You've got Netflix, Oracle, Walmart over here. Let's go down here and just take a look at BMY. Let's look at a few of these first. Maybe a standout as we look at this group is right there. In terms of that Oracle, it's getting a hit, and I'm wondering if we'll look at that position in a second here. But we're about zeroed out right now on FCX, BMY. So here we go. So it is a short put vertical. Oh, these are all short verticals. Okay, but this is a short put vertical, selling the higher, buying the lower. You can see that right now, collectively, it is profitable. Let's just do a quick look at some of these. All right, folks, we're back. Sorry about that. Just instructed that that was a YouTube error, but we're all set. We lost about 40 seconds or so. I'm just going to rewind. I was talking to myself for a little bit there, but we'll go ahead and just rewind where we're at right now. So we're just looking at, I'm just going to quickly pull this back up again. Just looking at some of Brent's existing trades over here. We were just looking to see if there was any maintenance or any sort of adjustments we could be making on some of these. Talking right now, just looking at Bristol Myers. Wanted to hit a couple of these as we go through this. By the way, do appreciate your patience as we went through that issue. And yeah, Connie's typed that in the chat. Thank you so much on that. All right. All right. And by the way, welcome to all of you joining us as well. Just welcome once again. Great to have you on board. Okay, very good. So, yeah, so we were selling the 53 and buying the 51. So bullish to neutral on this trend. You can see why Brent might have done something like, I mean, I can see it. I mean, look at this. The trend is decisively higher, almost forming. I don't know if we're quite there yet, but maybe working our way to a cup and handle. Perhaps that will happen over here, a cup and handle pattern. This could be even more bullish down the road. But just wanted to state that, I mean, it is still, we're coming off, when you're looking at sort of managing an option position here, where are All right, everybody. Well, hey, we're back. We're sorry, we're still working through some technical issues, but I think we might be good to go at this point in time. And so, just to come back and highlight where we are on this, not sure what we might have caught, but we were just saying higher highs and higher lows. So I wasn't really going to adjust this position just yet because it's still in check, and that's just one quick thing we can do on that. Now, moving over here. I'll pull this up and take a look at this as well, and we can look at some of the others. So FCX actually really doing quite strong. Price of copper has been rising significantly and substantially, and you can see us where we're at right here. Now, I think on this trade, if I'm not mistaken, yeah, FCX, Brent has a iron condor, and actually is turning out okay at this point in time. In terms of pulling back, the one thing you want to be concerned, I mean, just to be mindful of on an iron condor here is you like to see it obviously hold within that sideways channel. The one thing you'll notice with FCX is we've been going like this. Now, the long side might be one that we could potentially consider closing relative to the short side. The call side versus the put side. So we could cut out the calls and just let the puts run, the short puts, that is, the short put vertical trade, because prices are going higher. We just broke into a new high range today. So I'm going to take advantage of that right now on this pull back, which helps to reduce the call values on the pullback here, and then we'll just let the puts kind of run, the short put vertical run. Does that make sense? So let's go ahead and close those out right now, because I think it is trending, and that's just one thing you want to be mindful of with those iron condors for sure. In fact, we're all the way up here, aren't we? Oh, we're just about ready to expire. So it's still very, very close. This is really a very fascinating consideration. So we could let it sit. We are at 62. If we thought, you know what, I'll just let it sit. Maybe Brent had set this. We're pulling back right now, but if we start to bounce, that could be a consideration to close the call side. Just a thought out there. It is going to close ahead of, oh my gosh, wait a second, earnings too? Yeah, so this is just right ahead of earnings. So this is an earnings trade. Wow, I'm not sure. I'm going to hold off on this because I really don't know what Brent has planned around earnings. He might have something there. This is going to ride through earnings, and so I'm going to we're going to just pause on that one for a second. We'll just do a couple more of these. This one down here, Oracle, seems to be the biggest mover in the group, down about 475. Now, the only thing I'd say on this is too, is that with this, um, oh, he wanted to close it prior to earnings. Thank you, Eric. I'll go ahead and close it then. Um, I'll probably just close the whole thing, is what's going on. Oh, sound again. Okay, so it's intermittent, you guys. I really appreciate your patience. I don't know. Okay, we're back live now, but it is a little bit intermittent. Production crew is working with us best they can here. Okay, just a quick note though, you can see we've come down a little bit here off this level, breaking below that 180. This one, there's always the potential for it to bounce back up and move in an upward direction. So we've kind of hit near that max loss level. In fact, let me just jump back to this one real quick under FCX. And what I'll do, you guys, I'm going to just close this trade right now under FCX. So we really didn't lose too much. You're down about 14 right now. Here's the thing. If you close the trade right here, it's got all these different components. Now, I could click on any one of these and create a close this if I wanted to, but because we're looking to close it, Brent was looking to close it. I'm going to right click on it, create closing order, and look at that. I can buy the whole thing back right there at the top one. Let's go ahead and take a look at it real quick. Click and click again. All right, we closed it out. Very good. Hey, thanks for that information on that. And I could see why he might want to do that ahead of time. But hey, gave it a shot. Didn't really lose that much on this example trade over here too. Okay, here's another one. So here is AMT. I'm just going to take a look at the long singles. I won't touch anything that's not really too far away. Slightly profitable, etc. So here we are. Here's AMT over here. If I click on AMT, we'll take a look at it. It's just a long put. It's a long put. So it's bearish in nature. Some of these companies have bounced back as of late. The last one I'll examine as we take a look at this. Okay, and so this is a key point. We were just talking about the trend here. And what I'll say is the trend, as you can see on this long put, it was the biggest loser. Lower lows and lower highs, breaking above this range over here. And what I wanted to state was we just barely, folks, and this is the first time since August, right here, that we had a higher high. You see that? Right there, a higher high. We just broke above this level here. The 50 moving average, first of all, we broke above that. And we took out this high, we took out these lows, and we're just kind of sitting here. Now, a higher high, if we get a higher low, we could really start to move. So one of the things is we could try to take advantage of this pullback right now coming down, because that is a big move up. And, obviously it's not working great. We don't want to ride the trend up necessarily. So just looking at this and some of the technical indications that you can see over here. And by the way, a broad-based rally in this group as well. Just want to highlight that has been occurring. And so this one, maybe we can do. season. So let's go ahead and take a look at this. Now, a quick way to see earnings just in general, it's great just to take a look at this under the Market Watch tab. We can go right into calendar here too, right there. Under our calendar, if I want to look at S&P 500 companies, really straightforward and easy to do. All I need to do is actually go over here, click on the drop down, the wheel, because I just want to look at earnings coming up, past and present, for these companies. I'm going to go down to public folders, S&P 500, boom, right there. So as you look at the S&P 500, one quick note on this, you guys, that's really helpful for me. I always look at it not on a weekly basis. I just use the month. We can normally fit it in and you can look at those. But if you go to the month, not the week, right over there, take a look at this. Boom. Okay, now you got everything within that month. And this gives us a chance we can go back and take a look and just say, for example, what has implied volatility done as we go back into the 20th, yesterday? Okay, I want to take a look at implied volatility right now because this could be a very interesting aspect that traders, investors will look at to manage their option trades. Before I do that, a quick note. When I'm talking about volatility, let's just type in the VIX here real quick. Notice the VIX has spiked. We're up nearing the 20. We hit 20 yesterday, above 19 right now. All else equal, with a higher VIX, when you think of a higher VIX, a lot of times, just higher implied volatility, which we can check on individual stocks, but all else equal, that is a positive, all else equal, positive for selling options. The short verticals could definitely fall into that category, right? Iron Condor, for example, that could be a positive all else equal because we're just getting more premium out of it, out of those positions. And with a higher implied volatility, we can sell, for example, let's just say we're looking at puts, we can sell short puts at lower strike prices and still get maybe decent premiums for doing so. Okay, so that is a consideration. Now let's do this right now. I'm going to go back over into this Market Watch. I'm just going to take a look at these S&P 500 companies right here. We've got some that have, plenty in here. We've got Netflix, we've got Caterpillar. Let's look at some of these. I'm just going to take a look at what that implied volatility has done. Here's Netflix first. Now, Netflix, yeah, it took a dive. It dipped. Oh, didn't mean to zoom in on it. There we go. So Netflix took a dive. It's been lower lows and lower highs, as you could see, all the way down here on just a simple chart. But if we take a look now, obviously we can see under the trade tab what that implied volatility looks like. And by the way, this position, he actually has a position on it right now. But how did that fare with implied volatility? I'm going to show you guys some really cool stuff right from this page here. Here is implied volatility as it stands right now. We did get past earnings, but if I wanted to see that implied volatility, as opposed to just over here in these columns, as you can see, implied volatility is here, right? It's here. So you can see it under the trade tab. Still quite high with 2 days left on our January weekly. Okay, but what I can do is we can also take a look at this on the chart and just see what kind of behavior implied volatility has around earnings or other major events. You want to just type in IMP over here. There it is, your implied volatility. I'm going to go ahead and expand this out so we can really see it a little bit better here. That should be a color we can see fine. Okay, so we'll just add this down below and you'll see it right there. So a couple of key things. Obviously, we'll notice after post earnings right there, substantial decline right there in implied volatility. Now, does that have an effect on the option pricing? It sure does. In fact, it impacts the Vega, which we'll take a look at in just a second. Okay. What else is happening around implied volatility? You're going to see kind of this general trend. Look at the ramp up. So if we are selling options ahead of earnings, are we, effectively able to offset that daily time decay, that theta? It's a little bit trickier, right? Because look at this over here. I mean, here we are around 35 and we're up to 50 over here. That's 15% in implied volatility change over here. If we had a Vega that's, a dime for every 1% change in implied volatility. Boom, boom, boom. It's jumping up our option price because of the Vega, right? Just an example over here. There it is. We'll just look at this option. Where was the Vega? It's only a few cents here. But if I go out to another month, let's just say our February, notice it's not quite 10 cents, but it's getting there out of the money, about 9 cents. So for every 1% increase in implied volatility, if we were looking at this month, well, that's going to be increasing the value of the option, trying, folks, to offset. Because what's our goal? When we're selling options, we want the value to decrease so we can try to be ultimately profitable on that trade. That's the goal, the objective. But on one side, you're losing. That's a positive. But on the other side, you are gaining, and that is a negative right there. So we have to be mindful how these options can be impacted, obviously, by implied volatility moves ahead of earnings. Now, post earnings, it's a different story right there. You can see it dip, right? And so all else equal, that could be very helpful post earnings. But where does that fit in? Well, that might be useful for a stock that's maybe like over here somewhere. Now, I was looking at the short put side. What about the short call side, the short call verticals? The trend is down. And that would be kind of the anticipation I'd be thinking of from a trader perspective. They might be selling calls over here. Selling a call, right? Minus a call, and then buying a call up top and trying to participate in that move. And in that sense, that would have really, really benefited them over here. But look at that. That is a massive move in 1 day's time frame. We were over 55. We were over 50 right here. So let's just point to it right here. What's our implied volatility at right there, folks? That was 51. You can see I'm just looking at it right over here. I can actually point it over here too. And then 35. Wow. Right there. It's 15% just in 1 day. Did that help the short calls if you were short over here? Indeed it did. It really did. It helped those calls because the Vega, that decrease, now that 9 cent to impact that option, you'd be dropping 9 cents for every percent. And what did this lose? This is basically 9 times 15. 9 cents times 15 right there. That's how much those declined over that time. Not to mention the delta impact right over here. The delta was a different delta when it dropped, but just say, for example, the price of the stock dipped. Remember, the delta is looking at a 1% change in the underlying stock itself, right? So if the stock goes up $1, the option would be impacted by this option range would be impacted by the amount of that delta. Of course, if it goes down by $1, there you go. You'd be saying something very similar to that. Okay, so yeah, obviously that would have been very favorable for selling short calls, but particularly favorable because of the implied volatility dip, right? Now, that would have worked on contracts, like I said, that we're selling out over in time. So think about the anticipation here. If you thought earnings was going to continue to be negative, that was a gap down on the last negative post earnings on the last earnings event. We saw it again over here. It could be something to look at. But the key thing, one of the key things I have to state is that you want to look at this run up to earnings too, because as we're getting closer to that key earnings event, gosh, that Vega is working against our theta, and we're really not losing. In fact, the Vega can offset the delta and the theta if it rises rapidly enough. So, it might move in your direction and over time, and you still it might be working against you just because of the ramp up. So what would that mean? If you didn't want to be in that situation, you'd want to participate on something ahead of the earnings announcement, okay? Because it's going to expire. The theta is going to be so great here on an expiration right here and not here, ahead of earnings. And so that's where you'd be looking for an options expiration date. Does that make sense, everybody, for the X date right there ahead of earnings? Because if you're riding through, that option is going to be in there and you're going to be in for a wild ride unless you're okay with that. Yes. There you go. Thank you, Connie. Yep. So Connie has explained that, and there we go. Uh, I think we've been back on for a little bit now. So very good. All right. Yeah, we've just taken down the camera for just a bit, just to make sure that the presentation goes smoothly. All right, everybody. So that's what we're kind of talking about here. Now, folks, you guys, if you're finding value from this presentation, definitely give us a like in here, and encourage you to follow us too. And you can follow us on our Trader Talks channel right over here. Yeah, definitely subscribe to our channel. Love to have you on board here. There's a lot of great content. You're going to see a lot from Connie and Brent in here. I'm in here as well as the other coaches. You can take a look. But there you go. There's another class that Brent teaches right there. Condors, counters, butterflies. Connie's got straddles, strangles as well. So a couple of excellent classes in here too. And again, be sure to follow us on X if you're not already. Here is my channel, Mike Fairborn CS. I do try to post upcoming earning events. Obviously, you can see those on Schwab.com excuse me, Thinkorswim as well, the Thinkorswim platform. But this can be helpful too, to kind of come in and just see, hey, what companies are reporting, just to be mindful of, and how that could be impacted your option trades. And by the way, how are you going to create a strategy around that implied volatility to either not impact you or to have it impact you favorably based upon your expectations? That's what we're talking about today with earnings, and this can be of use. Be sure to follow Connie as well. Connie Hill CS. There is my X handle, but encourage you to follow us on there if you're interested in doing so. We do post financially related content. Okay, well, with that, we've got to dive in now. Getting all that under our belt, let's take a look at maybe some new positions to take a look at to add. You know what has been moving today are some of the semiconductors. I don't know if you guys have seen Intel today. Pretty nice move to the upside here. Yeah, it's got earnings right here as well. So what are we thinking over here on earnings? One quick note I'm going to state right now is that this major jump in implied volatility does a couple things for us, especially if we're looking at the VIX as well. Now, some of the implied volatility's probably jumped up a little bit. Let me show you something right over here. If you jump in over here and take a look, it looks like he's got a position on over here. But if we were looking to go out a little bit further in time, maybe into this monthly here, which falls into that 20 to 50 day time frame, which a lot of traders will look for into expiration. We've seen, so, you know, the implied volatility is quite high over here still. It's jumped up. What can that do for us? Well, remember that the Vega has been helping to kind of inflate, all else equal, if it's been rising, and we've seen some of that implied volatility climb in here, helping to potentially inflate the value of these option contracts here on the short put side. If we were looking at, you know, selling a put, for example, or short put vertical, you can see that right over here. Take a look at this. Now, could that have offset theta? It could have certainly helped. And the VIX is also higher. So we might be dealing with a very high implied volatility. What I'm getting at, folks, is we can maybe shoot further down the chain over here. Let's go to 20 strikes and just see. You can see that is a 27 delta. I'm gonna go even lower. Let's go to 30. There we go. Here's a 20 delta. We're still in the dollar range. $1.35, and a really good spread. I mean, it's a 5-cent wide spread. That's a 45. Here we go. Here's the 45 right here. I do want to look and just see. I'm going to add to this guy right now. Oh, cool. He's got some other ones in here. I didn't know that. I'm going to just customize this set right now, and I'm going to add in open interest, and I'm going to add in volume. I'm pretty sure a company like Intel that's got 133 million shares traded on the stock, it might be positioned fairly well for some of these, but some of them are newer contracts. But you can see down here, yeah, I mean, we're in the 10 figures here in terms of open interest and volume. So somebody might be looking at the 45 and saying, Mike, that's a long, long ways down here. In terms of, you know, expectations, traders might use an expectation and say that using the delta, they're just saying right there that there might be only an 18% expectation of the stock going below there before these 30 days. So it's really quite low, but they're still getting an amount that might make sense to them, perhaps because why? Elevated VIX. Implied volatilities higher due to an earnings announcement. Do you see how we can go further down and further out of the money with maybe lower expectations of us hitting that level according to the delta and still maybe make a premium that could make sense, but you still have to be okay going in after earnings. Again, great open interest, great volume over here, and really a great spread. I mean, we could probably shoot for somewhere in the middle of that range. It's not excellent, but it's okay. Um, you can see where we're at right there. This one's like a little bit higher. That's like the 5 cent spread here. What about this 45 or 45.50? Let's look at it right now. How do you guys feel about something like this? One thing you can do on the charts, you can say, well, that's the last low. There might be support at 50 because we did struggle at 50. You might have support 1 here, support 2 here, but I would say support 3 and maybe the bigger support right where Brent has put this line in here. I'm going to shoot for this level and let's just see what that shows. I realize that these are very, very low levels, but this is a strategy that some traders can employ around an earnings event as well. Okay, so if you come down here and you take a look at this and you say, well, there's 43, 42, 43 right in here. 43. What is 43? That puts us below maybe a couple smaller support levels and maybe a larger support level here. We've been doing pretty decent around with the trend. So let's just see though. I know a lot's playing on this, but that could be kind of a potential trade. So let's just look at that 43. Now there are earnings. Are you okay owning the stock down here if we just sold a short put? What does that look like? Here's the 43. Now that drops us down into this range. Still a lot of open interest. Pretty good spread in here too. There's 77. If we just looked at a short put only, what are we looking at here? Well, you can see that the buying power effect, the margin requirement, as you can see it, well, I'll just say buying power effect. This is listed right here. About 1,400 as it stands right now to get $77. Well, there's still quite a bit of potential total risk if the price were to drop. I mean, that's the max loss if it were to go to zero. Very unlikely, but we have to show you that theoretically possible, likely, but very unlikely. But what I'll do is, what if we just flip this into a spread trade and we can adjust that accordingly? Now that's a ways down, but could we then, if we're not willing to take that max loss, what if we went with a 45 and we did a strike or two spread? And we're just looking at risk over here. So here's the 45 instead. Here is a 44, excuse me, a 43. It's a 39-cent credit. Let's click on this right now. Okay, wow, max profit 39, not too great, but wow, a big difference in the max loss. Big difference in the buying power effect as well, right? Those same numbers over here. If we did, let's say, for example, three contracts, if we wanted to get back up to maybe something near 116 just by selling the put, could we do it if we had 3 contracts? Let's just take a look at this. Well, 117 credit, right? You can see up here, so we did get to the credit by adding more contracts in. Still, it's a far cry from the max loss around 4,000. It's a lot less in terms of buying power effect, like approximately close to $1,000 less. You can see that right there. Okay, are you still okay with the 45? That's the question. But again, that higher implied volatility with the VIX, just collectively, could be helping us here with that earnings event. I'm going to go ahead and send this through for now as an example trade on that short put vertical, okay? But we're still looking at it. I know we're out further in time, but and that can, increase the value of it as well too. But that is a way to kind of try to manage that risk and maybe get a potential benefit of the increase of implied volatility. All right, let me just take a quick look. Thank you, Connie, for your help in the chat. And let's continue. Look at this. There was another one too. And by the way, this has been kind of a little, I'm just going to show you this to you guys. This is another semiconductor company. It's been a little bit of a laggard relative to, let's say, AMD or Intel as of late. Even AMD, I mean, obviously maybe one of the leaders right now would be Intel. AMD could be another example of a trade like this that somebody could potentially look at, or on semiconductor. a little bit of a flag type pattern over here. I don't want to overlap too much just into semiconductors, but there are other paper trades you could be looking at as well. This one seems to also show some strength too. By the way, I'm not seeing earnings over here. Oh yeah, it would be over here about February. Sometimes you can kind of estimate over here into February around those dates. A lot of times they're the same, but not exactly the same, or they're similar. Okay, let's do another stock here before we finish this off. Our last one, we can take a look at Ford. Now you'll notice with Ford has been on an upward trend for sure. Yeah, and so we've been bouncing off that 50-period moving average a lot. Could we bounce again? Well, today, I don't know if we'll get it, but we could be getting close to a close above the high to low day. We're not there yet. What's funny is it would put us above the 20-period moving average as well. It would put us above the 20-period moving average as well. So if we were to get above there, if it's not today, maybe it could be tomorrow. But that could be a real interesting sort of a potential there too in terms of a bounce. Now with this one, you could also look at a short put vertical as well, or just in the direction of the trend, something bullish, or even just a short put. But notice over here, if we do that, it's actually really, really, even going out 30 days, you're not getting a ton unless you go right down here, a delta of about a 33, a 13. So you can look at that and you're kind of anticipating that it's just going to bounce off of where it's at right now, or at least hold 13, the prior low level here, and go higher. So that could be a consideration. Another consideration could be something like a long a long call at this point in time. And what would that look like? We're kind of running out of time here. But I wanted to show you guys this. If you look at a long call over here, sometimes traders will go a couple strikes in the money. There's a 68 to 77. Sometimes the sweet spot they might look for is a 70 right over here. So really kind of closer to this 13. So you're looking right here. One of the key differences is how much of a move are we expecting Ford to make? And then we have to tack on time on top of it, because we do have, yes, a time decay issue. This is where going long would impact us, obviously, on the theta side. Very good spread. I mean, it's tight. It's a tight spread. 24 million shares traded today on this stock. You're in the four figures here in terms of open interest, right there in thousands. So this could be something that could be looked at too. Would this have worked going out this far? Or should we go out a little bit further? It's 30 days. What I like to look at, folks, is kind of anticipate a move like that. A move like that. If I get a bounce, this is the move. This is the move. It's like within a week, maybe a week and a half or so. Maybe this was 2 weeks. But if we were to double 2 weeks, that could get us out into that monthly February time frame. Okay? We don't have time to put a trade on here, but I'm just planting some ideas out here. Folks, still, we're sticking with the trend as we go through this. And we look at these kind of characteristics over here too. This reminds me a lot of swing trades, which are really the strongest part of the trend, what you're looking for, where you might be bouncing off a support level and breaking higher. You guys, I do teach, just as a quick note, that is one of the playlists over here. One of the classes that I teach is swing trading, where we do try to identify the strength, the core portion of that trend. If this is of interest to you guys, here's the one I just did. I could throw this link in the chat, but we do look at those and we do apply options to them as well. Here's the playlist in here. Be sure to take a look at Connie's playlist as well. She's got some great stuff that tie in specifically to options as well. But yeah, this time frame is an area that traders will definitely like to look for in their discussions, folks. Well, on that note, it has been great being with you today. Expect Brent to be coming back into next week, a great instructor. Thank you so much for your help, Connie. Everybody have a fantastic day. See you next time.